Hi guys, today is kind of an educational video. Today we'll talk about candlesticks. Wait a minute, I'm not talking about what are candlesticks. I'm talking about throughout my 20-year investment career, how I use the candlestick patterns now for my strategies. Not that something that you can Google. So it's something that I, as a rookie, as a newbie, I used to search through the media, through the internet. So now all of them all talk about basic normal definitions of candlestick patterns. So not until I lost my money that I can create this strategy nowadays. In today that I'm using, part of the candlestick patterns is one of the course that I'm going to make in the Asia markets, in the Asia countries. So that, for example, if you follow me long enough, because the Amazon video is uploaded about 3 months ago. First of all, I'll talk about that. For looking for a stock, okay, so you really have to dig into the growth and the fundamental analysis, so that you understand in the longer term the business still will give you a really big chunk of return, really chunks of the game. So that if that works, then you will move to the technical analysis. Now you find a chance to kick in. Okay, so we'll never use the charting to choose and stop picking. We'll never do that. So that's really limited. The return is really less. Okay, so so charting is something that when to buy and when to sell. That's it. So to explain the market and to explain the market behavior. That's it. So Amazon, of course, will understand this before the annual report, right? So the annual report came out in February. Okay, so this video is made 3 months ago, just 1 month before the earning report came out. So that's here. Okay, if you follow the video, it's now $800 to $900. It's $100. It's an investment. It's not speculation, and it's something easy that I will teach you step by step. But by the time you haven't captured the skill set, I will still make videos and make examples so you can invest accordingly. But if you lose money, please don't find me, okay? If you gain money, come find me and treat me a dinner, okay? So seriously, it's about chance and probability. So it's a higher chance that is undervalued before the earning report. So we have the time and the scale. So we have the X and the Y, and just when to kick in, right? So now, for example, this reason, and also 2 months ago, I talked about gold, and 3 months ago. So in this area, it's kind of bottomed out, right? So it's now you're earning money, even it's dropping right now. So the timing is more or less I use the candlestick patterns. So there are 3 blind spots that people even investing for decades, they will miss out this analysis. Okay, how to use candlesticks. It's a really easy thing that you either ignore them or you misuse it. Okay, so what are candlesticks? First of all, candlesticks is started from Japan for the farming industries. Okay, so 1 day or 1 week or 1 hour, a candlestick will give you 4 signals. So first is, for example, the 4th one. Okay, so they give you 4 signals. Okay, so the really lowest point of that day or that time frame, the highest point, the opening, and close. Okay, so if the close is higher than open, that is a bullish candlestick. If the close is lower than open, that is bearish candlestick. And that's it. Okay, so the other parts, this one, we'll call it shadow. Okay, so it's the other information that the stock or the asset once was going really high, came back down, but it came really down, but it came back up. So it's a signal of, this is a signal of uncertainty, not sure, and people not moving, right? There's no direction. Okay, so this is a big bullish candlestick. This is a big most bearish candlestick. That's it. Okay, so in terms of other candlestick patterns, I can talk about it later. But now let me explain for beginners or even intermediate or people invest for a long time, that I find out that there are 3 blind spots that we always miss, that we miss lots of chance to buy or even sell. So let me tell you that the first blind spot, I will use Facebook as an example, because I have another video talk about Facebook and Tencent, right? The Tencent is the stock from from China. They tend to copy what Google is doing, but Google cannot go into China, right? That's the game, right? So anyway, so for example, that one blind spot is that people will tend to sell things when a big bullish candlestick happens. Okay, so in this case, each time it goes up, your hands get really itchy, right? You really want to sell the stock because someone tells you that not until you sell a stock, the cash is not yours. So okay, you tend to sell quickly. You can tend to profit a lot quicker than you lose money, because when you lose, you tend to you tend to be really patient, even more patient than facing your kids, right? That is mankind. That's human behavior. It's really normal. But my theory is never sell anything when there's a bullish candlestick, and never buy anything at bearish candlestick. Why? Because if you do that, you will miss out this chance. See, one by one is going up, right? One by one is going up, right? So you really have to wait for some chance like this. This is a big bullish candlestick, and then until this day or even the day after, then the bearish candlesticks really outbid the this bullish candlestick by at least 1/2. Then you know, oh, something's going on, then you sell. So, but when you sell that, you will tell yourself, that's kind of stupid, right? Why not I sell 4 days ago? Why I just sell today if the price is lower? The game is like that. You will never capture 100% of the trend, because without the cost of paying the cost to see what you are holding on the other side of your card, of the deck of the card, then you will never know that the stock is going back down. If you wait, the stock is going back down, right? But you can only play with the cards that you are dealt with. You will never know what will happen next, right? You will only make decision of what you have today. Okay, so in this case, if you I'm still doing the same, I sell it this day, right at the tip of the bearish candlestick, right? So that's chance, that's luck. Because if you do the same thing, you miss out this chance, right? Same with this bearish candlesticks. Something is happening. That's why it's showing bearish candlesticks, right? Not until it shows kind of the upturn and a little bit of rebound and showing it capture at least 1/2 of the bearish candlesticks, then you can buy. If not, you just wait. See, it dropped from 130 to lowest 110. Okay, that's pretty crazy, right? So, but again, why are you looking at Facebook this stock? Because I know the valuation will bring me long-term gain, accumulation of my wealth. That is why I'm looking this chart. Because why not? Because I have more than 3,000 of US stocks. I have more than around 2,000 in Hong Kong, and about 6,500 in Chinese, right? Not to mention all around the world. So if you think about this way, now I can play micro, right? I just focus in a few stocks. Okay, then you can just focus on US. But is US always be the winner? Not really, right? Not maybe in 10 years or 20 years the game will be different, right? I'm not sure US will be a bad country, maybe, but obviously we'll still be alive, right? At least we have to assume that we'll be alive, right? That's the first blind spot. The second blind spot, people think that, today there's a bearish candlestick, so the closing is lower than the opening, so that's bad. That's wrong. If there's a bearish candlestick, doesn't mean that the price is down compared to yesterday. Okay, let me show you this example. So let me see. I find this example, this one. So this one, open is here, the close is 125. So obviously this is a bearish candlestick. That's pretty bad, right? No, because the price compared to yesterday, this is closing price, is 123. So the price has gone up by $2. So this market behavior is completely different than if the candlestick is completely closes below this point, lower than yesterday. There's two different strategies. For this case, it's still bullish, right? Because it's gapped up and then it came back down a little bit, but it's not even close to yesterday closing price. So this is still good. But so this is something that people missed out, because you see, for example, this one, this bearish candlestick, this bearish, but the closing price is lower than yesterday closing price. So this is two different strategies. So for this case, you may start to sell. That is the same example as last year November 22nd. Okay, the third one is the shadow, the shadows. I talk about the bottom shadow and the upper shadows. Okay, so you see that, for example, this case, this one last year November 10th. So you see the bottom shadowing is really, really long. It's really, really supportive. That means for some reason, at this price lowest is 120. At this level, people start to think that the stock is really undervalued in short term. It shouldn't break. It shouldn't be broken below that, right? So that people start buying back, and before closing, it went way back up. Okay, so you see at the bottom, you see the bottom shadow is pretty long. That means it's supportive, and then eventually it went up until now. It's 146 as of yesterday. Okay, so if you see the upper shadowing is pretty long and pretty intensive, you see that people think that it's not kind of worth this price. You see at the top you see more of the upper shadow more than the bottom, right? So that means that the market is not agreeing with the price. Eventually it will go back, it will come back down. So this pair of candlesticks is exactly the same. Instead of making in one day, is in the morning it goes up, in the afternoon it comes back down. It's separated in 2 days. One day it goes up, the other comes back down. It's exactly the same. That's called pairing. Okay, pairing. This plus this is also end up result in this one, this single candlestick. So if you have mastered or even just understand these three blind spots, right, I can't guarantee success coming, but I guarantee you won't make stupid, dumb mistakes. So if you make less mistakes, that means the risk is lower, and the risk and return is completely different for your portfolio. It's really easy to grasp, easy to master, easy to understand. So please like and share this video so that I know that you guys like these kind of videos, and I will keep spending time making more of these videos. So you can share to your friends. Please show me that you like this video. If you like this channel, remember to subscribe this channel by clicking this bell button, or like my Facebook page, and then I have more of the we will be one of the earliest ones to look at my videos and to when my videos are updated. So with that being said, I'll see you next time. If you please subscribe if you haven't already. I'm Gregory C. So I will see you next time. Goodbye.